Well, since today the market's closed, we're going to go over a couple things I think that you've probably been hearing for the past probably couple weeks. Is there going to be a Santa rally? And one of the most classic things that people justify bull rallies because, yes, you get more bull rallies than you get bear markets. That's just a common thing. I mean, if you actually look at the chart, I actually want to go over Bitcoin in a second. That's actually really important. But if you actually look at it, you get longer bull rallies than bear rallies. So, like right here, if you actually look at it, bear rallies usually last maybe 9 months to 12 months, and we usually go into bull rallies for 2.5 years, like what Biden just had. Now, there's a couple things that you need to pay attention to because I can tell you right now that you're probably not going to get that saying there's going to be a Santa rally. The one reason why is because we already had a bull market for 2.5 years. If you don't understand, I'm going to go over rates today and explain because the federal rate decision is going to be on the 10th. It's going to be next month or next week, so you need to pay attention to that. Now, is that going to be bullish because he cut rates? No, that doesn't mean it's bullish because he cuts rates. I want to go over that too and explain that also. Also, I want to go over the Mega 7 and Bitcoin. If you actually look at Bitcoin, guys, it did something on Friday after close. I'm going to show you. Look at this really quick. And I've been posting about it for the entire week, and Bitcoin already is making its first move before the market. If you actually look, it actually made a rejection and got under that 10 and 20 moving average. It's sitting in a bearish stance right now, so be very careful. Not in a bearish trend yet, but what I'm saying is it is breaking its moving averages. And just like I went over the last video, every Mega 7 is sitting on a 10 moving average. So if the Mega 7 or break their 10 moving average, you're probably going to see crypto break its 10 moving average and probably start going into the lower ends of around the highs of the 70,000 mark. So I'm going to go over that also. And also, crude oil. Crude oil actually did make a break out of its 50 moving average. If you don't understand that, if crude oil has extreme pumps. Also, have you seen natural gas? Natural gas has been booming. So if natural gas is booming, what do you think oil is about to do? Common sense. And to the people that don't understand how natural gas and oil work, you get natural gas off of oil. Did you know that? Did you know that? I know that's mind-blowing because, some people actually don't know that. So let's actually go over the Santa rally because I kind of want to, go over it first and then come up behind it with interest rates, how that's going to work, and then go over your Mega 7 and explain why, because I have to justify it as a YouTuber. And by the way, I do these videos for free. So if you leave a like, that helps me a ton just because I like to help people, That's just my main goal. I've lost enough money in the market over the years where now I'm positive and I can show you how to do it. It's really not hard. And I'm not saying trade your trading style into mine. I'm saying literally my style of trading goes with price action, goes with charting, goes with, how you trade a lot because I read the same levels. If you are a new trader and if you don't know, price action and charting go the same thing. If you do algo, moving averages, go with algo. Like it's everything is tied together. So don't be one of those traders saying my trading style is the only way. Every trading style is tied the same. So let's actually go over a couple things today because, the biggest thing is are we going to get a Santa rally? Because, apparently that's just the same. And usually when I try to explain the Santa rally thing, because I think a lot of people are still brainwashed or there is still a lot of old heads that talk about it, especially probably in New York. They probably scream it just to justify their actions and stuff like that. So Santa rallies, right off the back, I'm going to tell you right now, it is 2026. It is not 1990, not 1980, not 1995, not 2010. The market is completely different. And what do I mean by that is I talk about it all the time. The Mega 7 are in control now. If you don't understand that, I'll put it right here. 7 companies control 48% of the market. 7 companies. And if you don't understand that, you really need to do some digging into this. You need to go to Google, type in what is the equal weight of every single index, and you'll see every company right here in a percentage. This percentage right here is market cap. If you don't understand market cap, then you're not really trading. That is probably the biggest mistake a trader can do, is not learn market cap into equal weight of what it is in the indexes. All of these companies are in every single index by a percentage. If you don't understand what I'm saying by that, I'll just go to one of the Mega 7 and I'll just show you one of the charts really quick. Here's AVGO. It is around 5% of the Nas, 3% of the SP500, 6% almost in the triple Qs, which I need to update these honestly. They're probably more now. But SPY 2.3%. Algo's kind of small. whatever you want to call it. I don't even like the company, honestly. Let's just go to a bigger company really quick. Here's Apple. Apple is around 11% of the NAS, 8% of the triple Qs. Just throwing that out there. Now, I'm going to kind of go over a couple things also before I start into why we're probably not going to get a Santa rally. So the first thing I do want to point out is the moving averages. If you don't understand moving averages, I'll just go over it really quick if you don't understand, because, a lot of people don't, understand moving averages, which I get it. A lot of people, they go and buy indicators, which those indicators you buy move off of moving averages, and they think, oh my gosh, I'm a pro trader. So let's actually just break it down really quick. When you are in a bear market, right, the 10 moving average tells you what your trend is and what is the market doing. If the 10 moving average is below the 20 moving average in the red, that means bears are in control. When you are in a bull market like this, right here, when the 10 moving average is above the 20 moving average, that means the bulls are in control. So let's just start off with this, because, I kind of want to point out, right off the back, this channel that we've been going in for 2.5 years, okay, that Biden was in office for this entire term, okay? We've had a bull market for 2.5 years. Let that sink in really quick. 2.5 years. As we're having this bull market from this start right here, raising rates, raising rates, raising rates, and raising rates, and raising rates. When you have a bull market, you raise rates. Why do you raise rates? One of the biggest things that 99% of the other YouTubers don't explain. It's because the market is booming. That means when you have a market booming, that means house prices go up. That means used cars prices go up. That means your rent goes up. That means they have to balance or put out more minimum wage. How minimum wage, especially Portland out there, they will raise minimum wage to balance it out. Now, here's the thing. We are cutting rates, okay? We are cutting rates because Trump has to cut rates. The biggest mistake that I've seen throughout trading is people do not learn rates. When you are trading, you have to learn basic economics, and that's why I made this channel. It's mostly to talk about basic economics, because no other YouTuber does this. They literally just go on Google, find a hot topic, hopefully their algo picks them up. I mean, if you look at Ricky, he'll post about what is really hot for that day. Those traders don't talk about it like this. But when you're raising rates, there's a reason why you raise rates, because inflation is trying to push up with the market. Because when you have a market going up, you have inflation going up. I'm just going to show you really quick to just make it, plain as day. Let's just backtrack to around 2019 to around 2022, as the market was booming because Trump was in office, right? If you actually go to the macro map, let's just look at the inflation, right? So this is what happens when you have a market booming. You go from around 3%, 2% to around 9%. Let's actually look at the exact percent, because I know there's going to be that one guy. Let's go to 2022. So if you actually look, we were around 7.8%, 8.5% inflation at these highs, because we were trying to slow down inflation. Now, when Biden came into office, he had to cut rates, right? How do you cut rates? When you cut rates, you have a bear market, okay? So right now, we're doing the exact same thing that we did in 2022. We're at extreme highs. We have high rates. So what you do is you cut rates. But why do you cut rates, right? That is the biggest question. And a lot of people, this is where a lot of people are like, well, we're cutting rates. This is bullish. Maybe for the day. Maybe the volume kicks in, and that's just something, a lot of dumb people go into the market and they're thinking, oh my gosh, this is awesome. The market's pumping. When you cut rates to a booming market, right, like this, to a booming 2.5 years, and you're cutting rates, what does that do to your economy? And that's not just us, that's the whole world, because the whole world, when we cut rates, other countries cut rates, because a lot of their indexes follow our index. But what happens, right, when you cut rates? So if you actually look at inflation, when we are raising rates for 2.5 years right here, okay, around 3% inflation rate, when you're cutting rates, there's nothing to hold down inflation. That is the economic 101. That is the basic economic. This isn't my opinion. This is economically like facts. This is what other YouTubers don't talk about, and I'm honestly surprised. Honestly, like, it's not that hard. When you go through a bear market and a bull market your first time, you learn all this. I tell a lot of people, until you're a good trader, you have to trade through a bear market and a bull market to learn rates. So as rates are really high, it's holding down inflation. So what I'm saying is, if Trump is cutting rates, what do you think is going to happen to unemployment? What do you think is going to happen to inflation? It is going to spike. And what happened last time when inflation was really high? You get a bear market. You get bad, CPI reports. You get bad, unemployment rates reports. I mean, honestly, that's why Trump is hiding the reports to just smack the market. I guarantee, with the government shutdown, it's just a theory. Don't ban me, YouTube. But when people aren't getting these reports, and he's doing stuff like this, and all of a sudden you see a hard spike in inflation reports, hard spike in unemployment reports, it is going to scare the market. So as we're going into December, we're going into January, you need to be ready for this. But what does that do to your Mega 7 stocks, right? Because there's a lot of new traders that still don't learn this. They don't learn what's in the triple Qs, what's in the NAS. So let me actually show you this, because, no other YouTuber is going to do this. So if you don't understand, all of these companies, nvda, let's go to Microsoft, let's go to Apple, right? All of these companies move together. Here's the triple Qs, here's part of the Mega 7. When you have these reports come out, all of these companies move together. And that's where your moving averages come into play. So let's actually go over the Mega 7 and talk about, the levels and stuff like that. But I do want to point out one more time, because I know there's some people out there, we're going higher in the market. For one thing, if you are one of those people saying that we're going higher in the market, I'm just going to let you know, you're battling a bull market. And what do I mean by that is, we reject every single time at this high. So if you think that all of a sudden we're just going to go into a Santa rally and it's going to break into a bull market off of a bull market, I'll pray for your calls. I'll sit back and just watch you, I guess. But you need to learn economics, guys. I don't get why other YouTubers don't talk about it. I guess they just, I don't know. This is partly why this is why I do this, because I want to educate people. A lot of my friends, they come to me about information when to buy and sell a house. It's really not that hard. When you sell a house, you sell it at the top of the market. When you buy a house, you buy it at the bottom of the market. Everything is about the market, guys. When you buy a used car, you buy it during the bottom of a market. When you sell a used car, you sell it at the top of the market. But let's go over some, the Mega 7, because I kind of want to point this out, especially Bitcoin. Actually, let's start off with Bitcoin, because if you don't understand, I know there's no viewers to the channel, so I'll just go over it one more time, because I know no other YouTuber is going to talk about it. If you are trading crypto or small cap coins, it follows the triple Qs. Here's the triple Qs, here's Bitcoin. Now, the one thing I do want to point out is, it's not down to the 1 minute time frame. That's probably one of the biggest mistakes traders do, is they're like, well, market is dropping this 1 minute time frame. Why isn't Bitcoin dropping? It's a overall, guys. Now, sometimes Bitcoin moves before the market. Sometimes it moves after the market. But I'm telling you right now, it's pretty much moving before the market. Now, I do want to point out this, though. Bitcoin and a lot of the Mega 7, or not a lot of the Mega 7 yet, but some of the Mega 7 are also breaking their 2023 bull market. So what I'm saying is, also against you bulls, you're having some of the Mega 7 already breaking out their 2023 bull market. I think there's only one right now, but it's 15% of the market. But I'll go over that chart in a second. But if you have a lot of the market rejecting and breaking these highs, that's not good. There's probably not going to be a Santa rally. So let's actually go over the charts really quick. But I do want to point out this, because on my last video, I pointed out how a lot of the Mega 7 were on its 10 moving average. So let's actually pull up this. So I do want to point out this. This push right here was the exact same push we had this past, 2 weeks? From the 25th of November to around the 4th, or wait, sorry. Yeah, around the 21st of November to around the 5th of December. Let me pull up the triple Qs really quick. So I want to point out this right here. Bitcoin has rejected after market close on Friday and went under its 20 moving average and is dipping and barely hanging on. The triple Qs, I'll show you in a second, hasn't made a rejection yet because market was closed. So this coming Monday, the videos I've been posting about telling you watch out for this rejection, you might see a rejection down to around 613 to around probably 608, probably Monday or Tuesday. So just be very careful. If you shorted at the top like I did, I bought not financial advice, but I bought QQQ calls around 619, 620. I'm probably going to post on the Discord if you want to come see the results, but not financial advice, by the way, education purposes only. But just be very careful. Do I think it's going to go lower? Yes, I do. But it's going to probably take some time. So let's actually go over the Meg 7 and let me turn on my moving averages. Let's turn on the 50, the 100 moving average, and the 200 moving average. Simple moving averages, by the way, if you're a new trader and if you're new to the channel. So this is what I'm going to talk about, is you're probably going to see a lot of the Mega 7 probably start pushing down to its 50 moving average. But how can you justify that, King, right? Because my job as a YouTuber is to explain this. So I'm going to show you, because there is new viewers to the channel, especially, dude, my YouTube channel is blowing up right now, actually. I think I'm up like 500% like in traffic over like probably 2 weeks, because people are finally getting it. And there's trading coming back in the market. People are knowing that the rates are getting cut. It's common sense, But as this market rejects, what can push this market down, right? Well, I can tell you right now, it's going to be very simple. And I talked about it last video. When you have a lot of the moving averages into one spot, here's the triple Qs. So you can see how there is the 50 moving average. You can see how there are the 20 moving average. You can see the 10 moving average is all in a cluster. It is going to be super easy to break through that, and I'm going to show you in a second why. So we could do something like this, where it's probably going to come down probably early Monday or morning or something, Tuesday or something, either way, and you'll probably see something like this. It could go a little bit lower and then bounce back up, but it's probably going to start rejecting off that 10 moving average and probably start heading down. Now, I'm probably going to stop around 592 because I kind of don't want to aim for the next support of 546 right off the back and get killed in decay. If you are shorting, that is, a long move down, which not really a long, but if you're in high options, you don't really want to aim that far. You want to play your moving averages. So as I'm sitting at 620, 619 on shorting, that is a great percentage on taking. That's going to be like a 200-300% gain. So that's what I'm saying is, if you're shorting, make sure you're paying attention to these levels. But as the 10 moving average, because I do talk about how if the 10 and the 20 cross, that is a trend change. But what a big problem traders do is, oh my gosh, it's crossing, go all in and do this. You need to justify it. You need a space. You need time to react. You get what I'm saying? Don't just, because sometimes the market can fool you, and I'm telling you that's probably what the market's going to do. I'm going to show you in a second why. So this coming week, be very careful. But let's justify this move, right? Because as my job as a YouTuber, to educate for free, leave me a like because it helps out a ton, is to educate you. So let's look at the backbone, because I talk about this all the time also. If you are trading the market, you need to pay attention to all of these charts. This is what's really going to decide what's going on in the market. So let's say, and I've learned over time, you really don't need 48% of the market to favor one side. Let's say about 30%. Let's say about 30% of these stocks start breaking their moving averages or rejecting off of the moving averages, or even in a bull stance, if you're pushing in the market and 30% of these stocks are pushing off the moving average, that's going to favor you. But what I want to show you now is what's probably going to be a shit. Wait, I can't really say it on YouTube, can I? No, it'd be a shit show next week probably. Now, that's probably where at 546, because that's going to be the next moving average comes into play. Just ban me YouTube already. I don't even care, honestly. So let's go over the Meg 7 and a couple charts. So this next coming week, the three stocks that made a push about a week and a half ago is AVGO, Google, and Apple. I was talking about this for about 2 weeks almost, warning people that, hey, they're just making a higher high. What this is going to do is this is going to come in the back end and slap everyone. Apple is notorious for that. I've watched Apple for probably 12 years, and for some reason, Apple's always the one just comes in and pushes really hard, and it'll pump a couple other companies like AVGO and Google, and then all of a sudden it starts to make little slow rejections, and you'll see that 10 moving average pump, and then all of a sudden when these start to drop, you'll see other companies push really quick. Meta, right? Because Meta did pump on Thursday or something like that, but they're trading off. Other companies do this, and I've picked up on it over the years. Companies trade off on ups and downs. It's just balancing pretty much in the market. But one thing that you need to pay attention to is AVGO, Apple, and Google. They made a rejection off the top of their channel. This is a 3-point chart. A lot of the companies, AVGO and Google and Apple, are sitting on their 10-moving average. I'm going to show you right now. So this coming week, if we do break in to say 610, just basic 610, 10-moving average, 20-moving average, this is going to start dropping down to its 20-moving average around 366. On Google, if we start pushing down to our 20-moving average, you're probably going to see Google probably make a rejection because it's sitting on its 10-moving average. It's about to break. That's what I'm saying. You're probably going to see a 301 coming into play on Google and on Apple. Notice how it made a rejection. It's sitting on its 10-moving average. You're probably going to see Apple, maybe the 50-moving average around 266, but it's definitely going to hit that 20-moving average. But just right off the bat, if these companies are hitting its 20-moving average, where do you think the indexes are going to go? The 20-moving average. Where did Bitcoin just go? The 20-moving average. Now, this week also, this was Meta that made that one push because it was trading off with Google and AVGO, what I was just talking about. But one thing I do want to point out is also, look, it's at a resistance also, just like Apple, Google, and AVGO. If this starts to push, you're probably going to see around 636 come to play, maybe 622. Once again, look at Amazon sitting on its 10-moving average. Also, look at the trend. The 10 is under the 20-moving average into a bearish trend. So if it does push up, it's going to fight that 20-moving average and it's going to get pushed. It's going to get pushed by that 20-moving average, and you're probably going to see a rejection around the 214 mark. And that's the 200-moving average. So let's actually go to Tesla, right? Because I think Tesla had a push also, but it's also hitting a resistance. So look, here's Tesla's chart, right? So Tesla's chart, 1, 2, 3, another rejection zone. So if this makes a rejection, you're probably going to see around a 435 on Tesla. Anything, and by the way, if I'm reading these levels, you shouldn't be shorting past these levels. Play your supports, guys. Don't try to predict Tesla's going to 200 tomorrow. Don't be that guy. Just play your short supports. Take your gains. There's never a wrong time to take gains. The most classic saying in trading. But like I'm pointing out right now, there is so much rejection zones that are coming into play. It is not going to favor a Santa rally right now. Now, maybe when all of these stocks start to push down to the 200-moving average, you could probably have a push up. But until I see that, there's no Santa rally. 100% not financial advice. Now, look at nvda, right? This is either Apple. I don't know if it's going to be Apple or nvda, but one of these companies is going to smack the market. And what do I mean by that? Look at nvda's chart, right? Let's see. You can't really take anything off to see a little bit better. I guess we can zoom in a little bit more. Yeah, we'll zoom in a little bit more. nvda, you have all of these moving averages sitting right here. Now, in order for nvda to pump, it's going to need the market to push to like 635 or 630, something like that. But the thing is, a lot of these bigger companies are rejecting. We're at high rejection zones, and nvda is literally on a breaking point. And what do I mean by that is it's been floating on its 100 moving average. Now you can see the bears are in control because the 20 is above the 10 moving average. So that's a sign that if this thing breaks, there is no supports until around 154. Also, if it starts to make a push to the 200 moving average of 154, that's the 200 moving average. What did I just read on Google? The 200 moving average. 555 or 545, whichever. That's what I'm saying, though. A lot of these companies already start making their push down to the 20 moving average. So that Santa rally is most likely not coming this year. I know, right? I guess we can call it crumpet, right? Yeah, let's call it crumpet. You know, all the old heads know that. Yeah, there was no Santa first. There was crumpet, right? I think it was crumpet. No, I'm second guessing myself. Either way, also on AMD, you can see how the 20 moving average is above the 10 moving average. The bears are in control. It is literally sitting on its 10 moving average. If the market makes a rejection, you're probably going to see 196 come into play. On the low end of the 200 moving average, 153. Also on Microsoft, if it'll load, Microsoft sitting on its 10 moving average. Now Microsoft, for a couple of weeks, or about a month and a half actually, already made its push to the 200 moving average. It was one of the first ones to push. So if a lot of these companies are starting to push down to their 200 moving average, It's kind of common sense where we're going to go, guys. Honestly, it's not hard to trade. Like, there's a reason why I only talk on the 4-hour charts or the 2-hour charts, because it's so easy to trade on the 4-hour charts. It really, really is. Now, if you're trading like on the 1 minute, the 5 minute, the 15-minute chart, to me, that's straight gambling. Like, I've tried it for years. Even with the knowledge I know how to balance the market with these stocks, it is still super difficult. You can still do call options, or puts or whatever you want to do on the 4-hour charts. Just extend your time frame. Like when not financial advice, but when I do calls and puts, I go 2 months out on them. If you don't understand like theta, I know because it's really confusing because no other YouTuber really talks about it, especially when you go on YouTube and you type in what is theta or whatever you want to call it. I call it theta. But when you buy longer puts or longer calls, like say 2-3 months, your decay isn't that bad. It's really low. Now there is some stocks that are like their own little thing, but like on these Mega 7, if you go 2-3 months out, your decay really isn't that bad. And now when you start hitting that 30-day mark or that 25-day mark out of like 2 months out, and you're still down, yeah, decay is going to come in and probably start eating you. You might as well take a loss. But Microsoft and a lot of these companies on the 2-hour charts have made a push down to the 200 moving average already. It's kind of common sense where the market's going to go, guys. That's really what I really wanted to point out, especially in this video. But Microsoft, right, sitting on its 10 moving average. If the market decides to make a push to the 20 moving average, you're probably going to see 490 or around 470 come into play. So just be very careful, guys. I don't really want to make a long-term video, an hour long, like some YouTubers do. But I kind of just wanted to talk about the Santa rally because honestly, every year when I hear about it, it just kind of annoys me. Now, there's some years I do agree to it. Like if we're about to go into a bull market, for sure. But guys, we went into a bull market for 2.5 years. If you're a new trader, I'm going to tell you right now, you do not go into a bull market with another bull market for 2.5 years. Or you're going to get a 1979 again.